The Bank of Japan increasingly an outlier as one of the world's last dovish central banks. Now, it's further diverging from its global peers by sticking to rock-bottom interest rates. The central banks from the US to England, Switzerland, Australia, South Korea, India and elsewhere, they've all raised interest rates and say more are probably on the way. In contrast, the BOJ governor says it's prepared to move monetary policy in the opposite direction.
我が国経済は感染症からの回復途上にある上、資源価格上昇という下押し圧力も受けております。こうした中で賃金の本格的な上昇を実現するためには、金融緩和を粘り強く続けることで経済をしっかりとサポートしていくことが必要であるというふうに考えております。
Well, the BOJ's decision to stick to its ultra-low interest rate policy, hammering the yen, it is continuing to depreciate against the US dollar. And as expected, the central bank has kept its short-term rate target at negative 0.1%. It's also maintained the 10-year bond yield target at around 0%. Now, it says it will continue buying Japanese government bonds. And for more, Dr. Martin Schulz, Chief Policy Economist at Fujitsu Strategy Planning Division, joins us now. Well, Dr. Schulz, Kuroda choosing to stick to this ultra-dovish stance despite a tumbling yen and rising living costs. Help us understand his considerations and how will this affect Japan's economy?
Well, what's clearly different in Japan compared in particular to the US is that inflation is still very low. It is 2.1% overall, but excluding fresh food and energy, which are temporary phenomena, at least in the Bank of Japan's perspective, it is only 0.8%. So no major inflation in Japan so far. And the central bank says and thinks that supporting the economy, supporting companies while they're coming out of lockdowns and the economy is opening, supporting them with liquidity is more important than being extra careful on inflation.
Well, Dr. Schulz, we've seen central bankers coming under fire for not acting sooner to tackle the beast that is inflation. Is it fair?
Well, on hindsight, obviously, inflation is going through the roof in the US, also in Europe, in parts of Asia, not so much in Japan, but companies are getting very concerned about their input costs, in part their import costs. Japan's import costs are 43% up. And half of that is coming from the exchange rate side. That is certainly having a big negative impact on corporate earnings. Plus, consumers who do not see their wages increasing see their real incomes dropping. So that will be a concern for the Bank of Japan when going forward.
Well, some central bankers, including Powell and Kuroda, have said that inflationary pressures are temporary. And it looks like they've been proven wrong. So how has it affected public trust in the ability to steer the economies out of inflation while dealing with slowing growth?
Well, I have to admit that I've been in camp temporary as well. And when you look from a Japan perspective, that might actually be right. Here we have now a big jump in terms of the import costs. We have energy costs going up, but the overall economy is not yet driven by inflationary pressures because wages are not going up. The situation is different for the US. And I think what the public and the most important policymakers probably have to learn is that they have been relying on central banks too much. There has been too much policy on the shoulders of the central banks, bailing out the economies, getting them pushing forward through lockdowns, having them propping up stock markets. That is way too much. They should focus more on inflation in the future again.
And just following up on what you're saying then, how can we then strike this balance and, what are the risks for the global economy if the public loses faith in the central banks?
That is indeed one of the biggest concerns. And this is why in the US, the Federal Reserve is now acting so fast, why the European Central Bank is changing course. What lies ahead for central banks is actually very, very challenging, because so far they were just propping up economies. They were very expansionary. Now they need to have a much more layered, much more difficult approach, because the governments are so indebted, so they don't really need and can afford higher interest rates. The economy might need it, but it also needs support when recession is striking. So that will be a very difficult policy mix. And central bankers need now all the trust they can get. So they need really good communication in the current situation.
Well, thanks for speaking with us, Dr. Martin Schulz there from Fujitsu.